Yeah, okay, guys. Let us just begin. Let us just begin. Let me not waste your time. Let me not waste your time. Let me not waste your time. So, okay. So I really don't know. I really don't know how to be like accurate when writing a word with this pencil, but it's fine. Okay. So, guys, what brought us here? It is actually indices. I hope we have all seen the invite, and I mentioned it earlier that it's indices that will bring us together, like how we can make money trading indices. So I welcome all of you guys. Let us just rejoice in sharing the knowledge that we have. Let us all rejoice uh, in doing all we can to improve each other. Yeah. So okay, guys. As I always do, guys. Are you hearing anything? I can't. Okay. Let me just try to help you if you can hear me. Uh, okay. Audio settings. Let me just try to type to these people. From Swaziland. We have to meet then, man. Configure settings. Yeah. Okay, let us get started. Let's get started. I hope a lot of us, or 50% of us, we were here in the last webinar where we spoke about very, very important things. So, okay, guys. So, what you need to understand, the most important thing that I will always say, okay, someone from Zambia, the most important thing that I will always say is that indices, they are a trending market. They are a trending market. Indices, when it comes to indices, they are a trending market. So let me just try to help those guys maybe who didn't watch my YouTube videos, or those who watch them and forget. Indices are trending markets. So if you are trading a trending market, it will be different when you when you trade another market. For an example, I always like to compare it with forex or currencies, but I will just say forex so that it can be understood easily. So guys, what you need to know, that when it comes to forex is doing all means to maintain an equilibrium state. So it is doing all it can to maintain that equilibrium. You see some words. So when it comes to forex, guys, forex will basically be moving like this in a long period, in the long run, trying to maintain a certain equilibrium state. Yeah, equilibrium state, so that the economy of those particular countries don't collapse, or it doesn't go up forever. It will affect another country. So basically, forex, when it comes to currencies, they are here to maintain the economy of the world, the economy of the country. So if they are here to maintain the economy, guys, we need to know that the way they move, they will move trying to prevent any error that can happen, because we don't want like seeing economies crashing, or some exploding. So we don't want to see things like that. So then the market will do all means to maintain an equilibrium state, you see. But when it comes to indices, guys, you need to know that here there is nothing that is to be maintained. So the market can go up like forever. The market can go down forever. As I made an example in my last YouTube video, that if you are to look volatility from 2016, it's been going it's been going up. So it can be going up from 2016 up to now 2020. But this one, if it can do that, there can be a clear sign of some country's economy going up or some country's economy collapsing. You see, so then when it comes to forex exchange, you need to know that when you trade a trend, you are actually trading this will look like an uptrend, this will look like a downtrend. So you will basically think that the market sometimes goes up for a long period of time and goes down for a long period of time. Yes, these fluctuations are not the same. You'll find that another fluctuation is long, another one is short. So okay, I just wanted to make that one clear so that we can I can have somewhere to start. Okay, so if you are trading a trending market like indices, if you are trading a trending market like indices, what you need to consider is how should we trade such a market? How do we approach such a market? In what manner of approach do we give to such a market? You see, so that's what you need to consider first. So let us start with this point that I will give you guys. For you to make money trading here, you need to have a single strategy. You need to use a single strategy. You will build this strategy from this, that okay, this is a trending market. How should I approach it? Because we all know, more especially volatility 75. You can see that this market, it can go up, and if it goes down, it goes down. You see, so now you need to formulate your strategy in that research which was made, that okay, this market is basically a trending market. So you need to make your conclusions based from that. So what you need to know, my phone is disturbing me here. Okay, what you need to know, guys, is that okay, now I've discovered that this market is highly trending. So now I need to form a strategy. So the strategy that you form, it should be a strategy that is based on trend trading. It should be a strategy that is based from trend trading. You see, for an example, you can't say you will be trading indices using horizontal support and resistance. You can't say you will trade indices using horizontal support and resistance. It is not a good strategy. Even some of the guys, they use this strategy. Some they call it Payapa, some they call it other names, where you will put a lot of moving average in the indicator window. What you need to know about that strategy, it's that strategy, it basically shows, it is basically used to trade horizontal support and resistance. The guy who created it, he used to trade support and resistance, daily supports and resistance, using that strategy. So if you take that strategy and you imply it into indices, you need to know that it will be hard for you to be profitable. So is it making sense, guys? Because people are not commenting. It's like I am alone. So I want to make sure that we are still here. Is it making sense? Yes, okay. We're still together. Okay. So guys, the most important thing is that you should use a single strategy. Trust me, in forex trading, okay, let me say 70%. Oh, Jesus Christ, even the 7 looks weird. 70%, and then let me say 20%, and let me say 10. 70% in forex trading, guys, it is risk management. And okay, let me just remove this thing. And what you need to know, 70% of what is required for you to be profitable, 70% of the requirement, it is risk management, proper risk management. And 20% it is the strategy. It is the strategy, guys. And then the last thing that we also require from you as a trader, although I can put it in other in different terms, it's strategy, the second one. The first one is risk management. And then the other thing that you need as a trader, it is good capital. Let me just put good capital. A good capital, a good trading amount, I mean. So 70% it is risk management. For you to be a forex trader who is profitable, these are the things that you need. Risk management, it is the key. So risk management also include discipline, because if you are not disciplined, you can't manage risk. So I just don't want to give you a list of things that you need to know. I will just bring them under each other. I will just summarize them. So risk management also include discipline, because you can't have risk management and we are without discipline. So discipline is there. So then for you as a trader to be successful, the first thing that you need, before you have your strategies, before you have what, if you have risk management, even if you can use the stochastic, as I always say, even if you can use the stochastic, if you have proper risk management, you will always be profitable. And at the end of the day, you will always be profitable at the end of the day. Not that you will not take negative trades, but what is important here, it is to take negative trades as a professional. Take losses as a professional. Lose like a professional. That's what matters. Lose like a professional. You see, it is very, very nice to see you, or to see someone taking a losing trade without being hurt. You see, just taking a losing trade and you remain the same, you remain happy. Why? Because that loss, it's a professional loss. It's not a loss that you were not expecting, that shocked you. Because it is important to know what you're expecting, your expectations, to know what you're expecting. When you enter a trade here, you know that, okay, if the trade goes up, I know that I'm expecting my profits here. And if it goes down, I know that I'm expecting my negative $5 here. You see? So basically, you know your expectation. So when price reaches this level, you know that when you close your $5, you will not be hurt when you close your negative 5, because you were expecting it. So traders who are not experienced, or traders who are still new, they do not want to accept that they will get negative trades. They don't want to accept that. So the people whom I give signals and the people whom I trade with, they know that sometimes we do close negative trades, and I close negative trades. So if you are a trader and you are not ready to close negative trades, forget about being successful in trading. Forget about being successful in trading, because what you need to know is that we can't avoid losses. There is no strategy that is 100% accurate. We can look all over. There is no strategy like that. So we need to be ready to take losses. We need to be accepting losses. I hope it is making sense. So now, as I say that, take losses like a professional. Be ready to take those small losses. Even if you have a $50 account, if you have a $50 account and you trade, maybe let's say you're taking volatility 75 index, and you know that now the trade is going the trade is going against you, don't be afraid to close that -7. Don't be afraid to close that -10, because it will give you another opportunity to take trades tomorrow. If you don't close it, don't worry, the broker will close for you when it reaches -49. The broker will close for you, and then you do not have a chance to trade tomorrow. How much good capital would you recommend? Okay, I will mention that. So make sure that the broker doesn't close for you trades. Make sure that you close for yourself. There are some people who say it's either I blow or I double my account. That's a foolish statement, guys. There is nothing like it's either I blow or I double my account. It's foolishness. It doesn't prove that you are a trader. It doesn't prove that you are a professional trader. Yeah, just mute your microphone. Let the one who speak mute his microphone. This boost. Okay. So it shows that you are not a professional trader, guys, if you are not ready to close your losses. It shows that you are not a professional trader. A professional trader, it is the guys who know how to take their losses and they accept them. If you are to look at the results of professional traders, you see, I was shocked. Like yesterday, I was just I visited there's this guy called Adam Ko. He is a stock trader, he's a professional trader. So I visited his site. I was just there to check his results, like how he trades, how he takes his profits. You see, I was just there to look at that, and I was shocked that a lot of his trade, it's like when he have maybe -4 or I mean when he have -4 trades, he will have maybe 6 positive trades. When he have maybe 10 positive trades, he will have maybe 10 negative trade, he will have 8 positive trade. So, but that guy, it is a big guy, but when you look at his losses and his profits, the gap is very small. But at the end of the day, he will always remain profitable. But he is always taking losses and he is taking profit. So it's not like he have only blue trades, only profits. No, he take both losses and profits, and the gap is not that much. So although he is a professional trader, but he can't avoid losses. So what makes him profitable? It is obviously risk reward. It is his risk ratio. It makes him profitable. Although maybe his strategy is not that 90% accurate, you see, but his risk reward or his risk management will always make him profitable at the end of the day. So guys, even if your strategy is very, very poor, even if you found your strategy from babypips.com, even if you found your strategy from a WhatsApp group, that strategy can make you profitable every month through proper risk management. Proper risk management. So guys, as we trade indices, let us not trade indices like people who are gambling. Let us not behave like gamblers, guys. Let us not be there to make to go and trade. Let that one mute his microphone. I will do it for you. Okay. Let us not go there, guys, to trade so that we buy a Ferrari tomorrow. Let us not go there to trade so that we buy Gucci's, Versace's tomorrow. It doesn't work like that. When you go to trade for those results, you need to know that you will blow your account, and you will blow it in a very, very short period of time. There is nothing painful than funding your account maybe with a small amount like $100, and today you blow it all. There is nothing painful like that. You know how big this amount is in our in our land here in Africa. You know that you can buy a lot of things. You can buy some part of furniture. You can buy a TV with this amount. You can buy a bed with this amount. You can buy a wardrobe with this amount. But then if you lose it in 3 minutes, you know that pain. So that's why we need to apply proper risk management. You see, $50 is a good amount if you have risk management. $50 is a good amount if you have proper risk management. But then if you do not practice proper risk management, we will hear you saying, I can't trade with $50. I need a $10,000 account. Then we know that you are not a risk manager. You are not a risk manager. You just take advantage of the equity. You see. So guys, if you have proper risk management, you can do anything with any amount. You see, you can do anything with any amount. So the most important thing, or the one major thing that kills us, is synthetic index traders. It is the lot sizes that we use. We really don't know which lot size is good. We really don't know which lot size is bad. really don't know, should I use the 0.30, should I use the 3.0, or should I use 0.0 what, you see. So you find yourself putting a bigger lot size where you're not supposed to put it, and you find yourself putting a smaller lot size when you're supposed to put a bit bigger one, you see. I hope we can all relate in that case, that there it is not like Forex, the lot sizes, they are confusing a lot. Find yourself putting a small lot size, and the trade can go a long way, and you only gain, maybe, let's say you gain only $2, you see, just because of maybe your lot size, you see. And you can find yourself putting a bigger one, and the trade can just go a bit against you, and you find yourself losing $20. So we need to know which lot sizes to be using. We really need to take time and study everything when it comes to our trading. Let us fall in love with this thing, guys. Let us just fall in love with it. So let me just check if I can remember some of the lot sizes that you can use. Let me make an example with a $300 account. A $300 account. So if you have maybe 150, you will just do calculations. If you have a $50 account, you will do calculations. But let me make an example with a $300 account, like which lot size is good, which lot size is bad. So guys, we know that all over the internet they tell us that go and risk 1% of your income, go and risk 1% of your income. But we know that it is very when we risk 1% of trend rate, when we risk maybe -3, when it comes to indices, it is a very, very small amount, and you can find that our stop loss is right next to our entry. So I recommend that you guys, you can risk maybe 2% or maybe 3%. So let's say in this case we risk 2%. We risk 2%. So if we risk 2%, we are risking $6. We're risking $6. If you risk 2%, guys, I recommend I will just give you lot sizes for five indices that I remember very, very well. Like, let's say your account is $300. Which lot size should you use when you're risking 2%? So for volatility 75, it's obvious, guys, you use the smallest lot size. Use the smallest lot size. Don't be deceived by the screenshots that you see people making profits of $1,000 in a minute trading volatility 75. You know, it is you who know your situation. It is you who know why you decided to learn Forex. It is you who know why you decided to trade indices. So don't be deceived by people, and you go there, you put a bigger lot size, and your account is blown in a single day. You see, guys, to speak the truth, we all know that. Why did we join Forex? We joined Forex because we saw that there was money, and we needed that money because of our situations or our lives. We needed that money, so we joined there to make money. So let us not allow small things to make us lose what we came here for. If you are to see it, when you begin trading Forex, if you can calculate the money that you have lost, and me, if I can calculate the money that I lost when I began, it's painful. It's painful. But when I look, or when I try to investigate why and how I lost that money, it basically simple things that I'm being deceived, that people are making such amount in a short period of time. I can do it, and I go there, I put a lot of money, yet knowing the basic things that we need to be risk managers. So if you take a trade for volatility 75, and your account is like $300, use the smallest lot size. That's why I really don't like gamblers. Let us not go and trade Forex like gamblers. This is not gambling, guys. This is a professional thing. This is a professional business. So let us not ruin Forex trying to gamble. It doesn't work like that. So let us take advantage, guys, of the freedom that the market gave us, that we can take profits anywhere we want, and we can cut losses anywhere we want. So it is a good advantage that we should take into consideration. So use the smallest lot size for volatility 75 if your account is below $300. And if you are trading volatility 100, not 100 first, but just 100 index, you have to use a lot size of 0.3. I don't think this one, it's not the smallest lot size. But if your account is $300, use 0.3. And if your account is 200, use 0.2. If your account is 100, use 0.1. Just like that. For volatility 50 index, guys, if your account is $300, just use 0.6. 0.6. And if you set your stop loss, you need to know that your stop loss won't go beyond -$6, because as I told you that we are risking 2% of this income. So if you set your stop loss, like estimating from forex, in forex trading, it is around 30 pips, just the estimation. Then when you bring it to indices, it will basically not be 30 pips, because the way we calculate points there, it is different. So it won't bypass -6 if you open such lot size and you set a stop loss which is 30 pips when we estimate, like in forex, you see. So when it comes to okay guys, sorry for this one. This is for volatility 10, like 0.6 is for volatility 10. So just forgive me, guys. It's for volatility 10, 0.6. It's for volatility 10 index. Then for volatility 50, guys, it is use lot size of 6. That's a lot size of 6. It's a good lot size that when your stop loss is set well, it will not be beyond -6. So for volatility 50, use 6 as your lot size. For volatility 10, use 0.6. For volatility 100, it's 0.3. Then the last one that I can get now, for V100 first, like volatility 100. For volatility 100 first, guys, I encourage you to use 0.06. 0.06. V25. I really don't have it right now, and I can't remember it in my mind, because I'm trying to check here. I wrote only these ones, and I forgot to prepare it even when I come to this webinar. I never thought I was going to teach it. So, Peter, I'm sorry for volatility 25. I'm basically going to bring it maybe when we have another webinar, or you will just go there and do, and just open on a demo account, open a trade, and see, like, when it has gone this far, how much how much does it consume? When it has gone this far, how much does it consume? So just go and calculate that one. I hope it is making sense. So the other important aspect, guys, when it comes to trading indices, not just trading indices only, but when it comes to like trading as a whole, there is one most important thing, guys, and it will always put you on the positive side. It is consistency. So, guys, if you lack this, it is impossible to make money, because that was an error which he corrected. Oh, 0.06. It is for V100 first. Lolo, it is for V100 first. Like if you have $30. So okay, guys, let me just finish up here. If guys, you lack consistency, you will be changing strategies now and then. You'll be changing strategies today, tomorrow, and then the other day. So if, guys, you receive a certain strategy, or if you teach yourself a certain strategy, you need to know, guys, that you need just to be faithful on it. You just need to use it every day. For you to conclude that the strategy is bad, make sure that you have used it every day. Like, we all know that every day you guys, you go to YouTube to search for strategies, and you receive strategies. Everyone is posting a strategy, and on the internet, on PDFs, everyone is sending strategies. But you use it today, you see few losses, you see 3-4 losses, you say, this one is not working, you put it aside. Tomorrow you use another one, this one is not working, you put it aside. So the entire 3 years of your trading, you've been changing strategies every day. So how are you expecting to make money? It's difficult. So guys, just take one strategy and stick to it, and be faithful to it. If you are consistent, like, just apply those lot sizes that I showed you. Apply the lot sizes every day. Apply the lot sizes now and then. Apply the risk management every day, like a single risk management every day, until your account changes direction. Maybe you were having $100 account, until maybe it is $200. You can now shift a bit on your lot sizes, or on your risk management. Basically, you can just shift a bit. But guys, just use one thing every day. The thing that I can assure you is that you will have negative trades. But what will beat your negative trades? It is consistency. It is consistency, because with consistency you will also receive those positive, and those positive trades, it will be big trades, so they will swallow the negatives. So every week you will find yourself on the positive side. Every week you will find yourself profitable, because of consistency in your strategy, consistency in your risk management, consistency in everything, guys. So make sure that you are consistent. And the most important thing that helped me a lot, it is, guys, trying by all means to limit your time in front of the charts. Try by all means to limit your time in front of the charts. If you are looking your charts, make sure that you are looking your charts for analysis, or you are looking your charts just to study how the instrument behave. Don't look at your charts like every time that, let me just go and trade. And if you find, you'll see something there, you'll find volatility trying to go down, and you say, wow, it's going down. You press your button, yet you didn't even look maybe on the other bigger time frame. Maybe, let's say, volatility is maybe it is somewhere in a support level here, and it is just moving with a single candle, and you conclude that it is going down just because you went there, you just looked at your chart and you felt like, I want to trade. So if you are a trader, don't have itchy hands. Don't just see that, okay, people are trading in the internet, people are trading on WhatsApp, people are trading on Telegram, let me go and trade. I need to trade. Don't be hungry, guys. Just decrease the time you spend on trading, because if you trade every time, every minute you open a trade, you will take useless trades. So make sure that you filter trades that you take by reducing the time that you spend on charts, because you will find a person in a day he has taken like 60 trades, 30 trades in a day. You see that the person who was trading like all day long, and you just close and open, It doesn't work like that, guys. So even me, those guys that I trade with, those who take my signal, they know that I don't trade like now and then. So guys, make sure that you apply what I've told you. It will help you. Guys. So yeah, I am left with a very, very, very short period of time here. I'm left with actually a minute. So I hope, guys, this was helpful. So I promise to have another webinar very, very soon. So yeah, I can't even share a link to my Telegram channel here because the time is now against me, but let me just try. So guys, if you have like a Telegram group, you can join us. This is a link to my Telegram. Let me just send